All right, welcome to this episode of Market Shares. I'm your host, Tony Blodgett, and I'm all by myself today, but we're going to talk a little bit about the market and what's gone on this week. It was a big week. We had, inflation numbers come out this week, and then followed right by that was the Fed meeting and Jerome Powell's decision on monetary policy, as well as the Q&A that happened after that. So action-packed week as far as interest rates. So I'm going to kind of unpack a little bit about at least my perspective on what kind of transpired this week, and then we'll get you back to your day. So as I record this is after the Fed announcement, and as you probably know, the Feds did raise interest rates. They anticipated 50 basis points. No surprise there. You know, we really expected the Fed to raise 50 basis points in line with kind of what the projections have been for quite some time. But the big kind of concern was, what was Jerome Powell going to say, both in his statement but also in the Q&A that happens afterwards. And so I was able to watch most of it live kind of as that came out. And I got to say, I think the market really appreciated what he had to say. And when I say the market, I mean, the mortgage market, bond market, etc. I didn't look at the stock market too closely, but I can't imagine there was really any major surprises, because not only did they raise 50 basis points, but they stayed with their same messaging, which is, look, we're not out of the woods yet as it relates to inflation. He made it very clear that there will continue to be more increases to the Fed funds rate as we move into 2023. So no change to that idea. A few of the reporters were really trying to press him, like, well, is it going to be 50 again? Or maybe you slow down to 25 basis point increments, and he wasn't willing to share that. But I would be surprised to see another 50 basis point hike in the future, unless we see some economic reports, inflation reports that come out between now and that next meeting that are kind of different than what we expect. But I don't think that's going to happen. And let me explain to you here in a second why. But overall, he continued to say, look, we are not done fighting inflation. We still have a lot of work to do. We're going to stay the course, and we're going to make sure that we stamp this out. And to be honest with you, the mortgage rates, at least during his presentation and afterwards, improved. Not a lot, but we definitely saw an improvement in mortgage-backed securities right on the heels of a pretty significant improvement that we saw when the CPI number came out earlier in the week. So that was really good to see, and kind of reinforce that we are seeing definitely better interest rates. Now, one of the things that I thought was interesting about the question that was asked of Jerome Powell was, hey, look, the stock market, since you started this, is still up about 6%. Mortgage rates have started to come down. I mean, we peaked up in the low to mid sevens. We're probably now in the low to mid sixes. And so we've definitely seen interest rates come down. We've seen the stock market continue to be resilient. And it's like, is it really working? Is what you're doing actually having the intended impact? And I think what's important to recognize about what the Fed's doing is the market is reacting to the Fed's decisions. And what I see is that the market feels like they're doing what's necessary to bring inflation down. So it's not so much what's happening, it's how we react to the actions that they're taking. So keep that in mind, that the Fed will continue to stay their course. They made that very clear. And what we're seeing as far as lower interest rates is investors feeling like, look, if the Fed's going to stay their course and they're going to do what's necessary to keep inflation low, well, then I can feel confident investing in these longer term maturity bonds, because I know that their value is not going to erode as much over time. So we've talked about this a lot on the podcast as far as the relationship between inflation and mortgage prices. But just know that the investors that are purchasing mortgage-backed securities, they like what the Fed said. That's why we saw rates improve a little bit today. Again, most people think when the Feds raise rates 50 basis points, rates just went up by 50 basis points. Again, another example of where that's not what happened today. Now, I think if the Fed had only raised a quarter, well, you may have actually seen mortgage rates get worse. But because they went a half and continued with this kind of hawkish stance, then the investors that buy mortgage-backed securities like that, rates have continued to improve. on the heels of CPI. So let's talk about CPI for just a minute. Now, look, there's no surprise on this podcast or those of us that really watch the market closely or any of the economists that are in the mortgage space. There's no surprise that CPI came in lower. And the reason for that is because the number that it was replacing in 2021. So as an example, we've talked about this, October of 2021 was 0.6%, and then that was replaced by 0.3 in October of 2022. So year over year, we saw a 0.3 drop in CPI. November was 0.5 in 2021, and the report that just came out this week was 0.2. So again, another a 0.3% drop or 0.3 drop in the year-over-year number from 0.5 to 0.2. Now, obviously, we don't have December or January's number yet, but just so you know, the numbers in 2021 that we'll be replacing is 0.6 and 0.6. However, after that, it gets a little bit interesting because February is 0.5 and March is 0.3. So what that tells us is that if we see a CPI read in February or March that is the same or higher than the 0.5 or 0.3 that we saw in 2021, you could see this is where that double dip comes as far as inflation goes. And my thought is the Fed, they see this too. And they're not going to let up until we kind of get through that February, March timeframe, because then we start seeing higher inflation reads. And as long as we stay in this 0.2, 0.3 range for the next few months, that's really good year over year inflation numbers. But we got to be careful as we get towards the end of the first quarter, and hopefully we don't see another, spike in the year-over-year inflation, which could really cause the market to freak out. But for now, look, mortgage interest rates are loving what they're seeing. Inflation reads are down the last 2 months in a row, October and November. The Fed is continuing their course with their commitment to fight inflation. All of those things are playing out very well for mortgage interest rates. They are definitely down. And I think that obviously the housing market is slower, but if you look at projections, I was reading a report, maybe I'll cover it more in depth in a future episode, from the National Association of Realtors with their expectations for the housing market, and maybe I'll compile that with some other data. But look, I think that we're going to see a fairly flat housing market in 2023. I think we see some appreciation still in the first quarter. Maybe we see a leveling out. Maybe I think they're projecting it was less than 1.5% potential decrease in values for the subsequent 3 quarters after that to round us out of 2023. But look, I think then what we start seeing in 2024 is some real pent-up demand. And so I still feel like there's going to be a slower housing market. But for those of you who want to purchase a home and get into the home of your dreams and be able to do it with favorable terms, negotiate maybe those buy downs like we've talked about, or other, repairs, and really get the home you want in the way that you want it with help to secure the best financing from the seller. I think that we're in a window to do that, and interest rates appear that they will continue to at least soften a little bit as we move into 2023. I am happy to report that if you've been watching this podcast, you heard me say rates would never get to 9%. We didn't even get really that close, but it sure felt like as they were steaming from 3.5 all the way up into the 7s, it's like, oh my gosh, are they going to keep going? Well, I'm happy to report that I feel confident to say that this has turned the corner. I don't think they go all the way back down into the 4s like some people are predicting, but you're going to see a gentle improvement in mortgage rates, making housing more and more affordable as we move into the new year. So that's my update, you guys, on the market. Look, sometimes we like to just speak about what's going on, relevant news. That's what we did this week, and we'll be back next week with a great guest again, and bring you some of that content as well. So please continue to share this podcast with your friends in the mortgage industry. Obviously, like and subscribe. I'm sure if you're watching this, you already have, but if you haven't, please do so, and I will see you on the next episode of Market Shares. Take care.